Hey, it's Rick for Wednesday, November the 16th. No change to my risk model. The 200-day is still declining, so pretty soon it's going to catch up with price. So we may, the next 7 days or so could be interesting as as you'll see in the charts in a second, as we get closer to the 200 and whether that 200 actually starts to flatten out. So let's just take a look now. Here's the SPY. We've had 3 really quiet days, which is kind of to be expected as we get. So I've said many times, this 200-day moving average is a bit of a barrier. And so the market's going to have to want to make up its mind. Are we going to plow through here, or are we going to roll over, or just keep on going sideways? It can only do one of either of those 3 things. The interesting thing I find from here is these 2 moves last Thursday and Friday were on decent volume, one big volume day. And you see the volume has dropped off quite a bit in the last 3 days. So just a sign that any selling that's out there is being quietly absorbed, and there isn't a lot of, it's not a seller's dominated tape. So, I mean, that could change on a moment's notice, but it is kind of interesting that the volume has dried up. So everybody's basically in a wait and see mode. So similar picture for the QQQ. Oh, one of the things too, as I've said before, to manage your risk, if you had put 25% or even 50% in the S&P index, as I suggested somewhere a little while ago, you want to keep a tight stop on this. The distance from today's price down to this pivot down here is about 7%. And I wouldn't want to see it go any lower than that. I'd be bailing because it could get really ugly. In fact, an argument could be made that you'd want to keep your stop around the 4% level, because if we get below all of these 3 moving averages, odds are pretty good it's going to keep on going south. So I'd keep a tight leash on anything you have, and keep your risk in that 3 to 7% range. Qs, pretty much the same story, although here from here to get below the moving averages, yeah, it's about the same. It's 4%, but to get all the way down here is more like 9%. So that's more than I would be willing to tolerate, that's for certain. Even if you're half invested, you lose 9%. That's a 4.5% hit to your total portfolio. Not insurmountable to get back, but no need. We can get out a lot sooner than that. Toronto is a similar picture. Again, we've gone flat right here at the 200. You could make an argument the 200 is starting to flatten out, but I'm not going to get anywhere near aggressive until this actually is moving upwards, because it could easily just, price could come down and then the moving average keeps going down. So the delta from here to below this pivot here and this moving average is around 4%. So it's the same story here. So any positions that you have open, for me, my recommendation would be keep a max tolerance risk of about 5%. And if it hits it, fine. And if it goes back up, you can buy it back. I mean, commissions are so cheap. I bought 50 grand worth of something today. My commission was $4.95. So, commissions are nothing nowadays. Speaking of my positions, I went from 7, I think on Monday I was 93% cash, and I'm almost 50-50 now. I got a little aggressive yesterday and today. I'll just quickly review some of these. ACLX I've been in for a while. It stopped me out. I had a stop. So we lost about 2.5% on that trade, which was like 0.1% of my portfolio risk. So that one stopped out. It was decent pattern that just didn't pan out. So we move that to the closed trades. DK still in. Entry was here. I've taken 90, almost 90% of this off. And I've got a 12% position that I'm just going to ride it. See how high it can go. I've raised my stop up into here. So I'm still up about 10% on this one. I've already banked about close to 6% on most of the positions. So happy with this one. Probably if it gets above here, it's just depending how it gets there. It can go sideways here for a few days. I would be looking to buy this one back again above 35.30 as it clears these new all-time highs and goes to a new all-time high. HDSN is a new position from yesterday. I was entered on this pullback. It broke above yesterday's high, and that's where I purchased it. And I have a stop below this low down here. So it's a fairly wide stop for me, around 9%. But I position sized accordingly. I just took a relatively small position. ISCC as well was a new position. This is not in my pattern playbook, shall we say. This is what we call a power play. If the stock is doubled in a really short period of time, went from like $6 to up here to, went from 578 to $9, didn't quite double. And then I was gone sideways now for a period of time. It did try to break out, got rejected, and has come back. So this is kind of a speculative play on my part. It doesn't really fit my normal playbook, but I'm in here with a really tight stop on not a super big position because I don't have a lot of conviction in this. But I'm looking for a target up here around 940, 950. I'm in at 880, I think it is. 8. New position today. MGPI. Sorry for all these lines on the chart. The green lines are where I entered. I entered this position right here at 115.50, expecting a breakout of these all-time highs right here. And then when it did break it, I had a buy stop order in, and I doubled up on my position at 116.20. And now it's closed up north of $118. As you can see from here, if I draw a line from here, there's no supply. All the supply has been taken out. So this really should just run. The volume is not very big, but my initial buy, I entered here, put a stop down here. On my secondary purchase, I entered higher, put a stop in here. And now I'm raising, tomorrow morning, I'll raise this stop back up to here to keep my risk down to next to nothing, because almost a free ride on this trade. On the expectation, a lot of people will see this chart tomorrow when they review the new high lists and could jump on the bandwagon tomorrow and propel this higher, but who knows? We'll see what tomorrow brings. Also entered MNST. This is on a pullback. I draw a line here like that. Sort of a classic buy for me. But I made sort of a cardinal mistake that I do here. I bought it based on the pattern, and then got onto MarketSmith, looked at the fundamentals, and I don't really like them. They're kind of crappy. Their earnings have not been growing. Sales growth is not that big, and it's way too big a company for me. Normally, it's about a $50 billion company. I don't usually trade things that have that big a market cap. Yeah, 52 billion. So I had tomorrow morning, I'm going to take my stop. Actually, I did it already this afternoon. Take my stop. I'm going to raise it right back to my break-even point. So it either works or it doesn't work. If it doesn't work, it costs me the $5 commission. PCBX, been in this for a few days, bought this breakout here that did not work. And it's not reacting really well, but hasn't hit the stop yet. The stop is below this pivot here. So just give this another couple of days, see what happens. And then PWR, again, this is very sloppy pullback. I bought it on the break of this pullback here yesterday, and it's reacted very nicely today. A better buy for this one would be above here, above 150. If it clears 150, that's actually a better place. I will add to my position if it does get up that high. And even if you have a stop down here at 142, that's only about a 5% risk. So I would take, and they have decent fundamentals, not fantastic. Let's check here. There, well, yeah, earnings per share have been growing at 60%, 40%, 20% the last 3 quarters. So I don't like the fact that their momentum on their earnings is slowing, but nevertheless, it is showing a decent earnings per share growth, and sales growth has been growing. Last 3 quarters grew by 47%, 41%, and 33%. So in this environment, to have that kind of rapidly increasing sales is a good sign. So that's those. On my other closed trades, I did have the double HXU, the Toronto ETF. And I said, I changed my mind here. I said I was going to hold this for a bigger move. I'm already out 3 quarters of it, so I only had a quarter position left. And I was going to hold it for down to this this stop area here. But I got a little chicken shit yesterday and sold the rest of it here, thinking if it does actually get back down here, I'm going to be buying it back anyway. And if it actually goes above 1913 or where the 200 is, I'll probably buy it back again anyway and buy it at a higher price, but I'm going to have a really tight stop on it. So out that one. I think it was about a 13% gain on that, so that worked out pretty well. KRE was one I explained on Monday, was a crappy purchase, badly timed. So I raised my stop up, so my loss was like really tiny. Fully expecting to get stopped out, and sure enough, I did. So I'm okay with that. And then the other open sector positions still performing well. The biotech index, I'm in from down here. I've sold half here. If this actually can tighten up here and do something like this. Oops, that's not a very good line. I'll be looking to buy this one back again when it breaks this trend line, and I'll be adding back to this position. And then XLV, the healthcare index, has done nothing since I bought it. I mean, I got a decent price, but it's done nothing. My original stop was down here, but I've now raised it to break even. So I really don't care what happens with this. So I can't lose on it. So well, that's it. That's all for tonight. Sorry to bore you with all my positions. Nobody really wants to hear about my stuff. You want to hear about ideas for you, but we'll get there. Right now, for most of you, there's nothing to do. Just sit tight. The market's going to change. Cheers, everyone. Talk to you tomorrow.